Kia ora. E na raurangatira mā, no mai haere mai whakatua mai ki tēnei hui mariko. Ko Barry Coates aho, ko te kairahi o te putea whai whakaro. Nō reira, tēnā koutou, tēnā tātou katoa. Good evening. I'm Barry Coates. I'm founder and CEO of Mindful Money. A very warm welcome to you all. This is the sixth in our second series of online seminars, and I invite you to watch the 4 previous seminars. They've been on different aspects of climate change with Rod Oram, Minister James Shaw, Laura Clark, and others. And last week we talked about leveraging mainstream funds for social housing. We had a great panel, a great discussion, so check out the video on Mindful Money's website. So welcome to tonight's panel. During the discussion, please use the Q&A function for questions, and you can ask those at any time, or you can put your chat into the chat window. We look forward to your commentary as we go along. We'll make sure there's plenty of time for questions. So this seminar is part of the theme of investment funds contributing to social benefit. It's the sweet spot for many investors. You get a good return and you create positive impacts. Sounds too good to be true, but thankfully it isn't. And we've got a great panel to talk about combining good investments with good impact. So without further ado, let me welcome our first panel member, Jackson Rowland. Jackson's a director of Akina Invest, and he's part of the management team of New Zealand's first impact investment fund, the Impact Enterprise Fund. He's a firm believer in the potential that impact investing has to transform some of the most significant challenges facing New Zealand. So, warm welcome to you, Jackson, and let's kick off. Can you tell us a bit about your work at Akina and Impact Enterprise Fund?
Yeah, sure. Tēnā koe, Barry. And before I do, just a big thank you to the Mindful Money team for all of the work you continue to do to hold and build this impact and responsible investing space. So thank you. Kia ora koutou katoa, ko Jackson tōku ingoa. I come from Nelson, down in the South Island, and have been living here in Auckland for a number of years now, working at Akina. Akina, we are New Zealand's leading impact consultancy, really working to enable businesses to improve the world. And we do that in 3 main ways. Firstly, through our impact consulting work, where we work with the larger holders of capital, the larger organizations, to help them understand their impact and manage and improve that impact over time. Secondly, we do a lot of work in the social procurement space, where we work to help those larger organizations again purchase from social enterprises where possible to grow the impact that way. And finally, our investment work, which I lead, where we aim to build impact investment in New Zealand. We do that in a number of ways, but one of the most exciting of which was launching New Zealand's very first impact investing fund in partnership with Newground Capital and Impact Ventures. That is the Impact Enterprise Fund. It is a $9 million venture-style fund targeting a 15% IRR, whilst also delivering significant social or environmental outcomes from the businesses that we're investing in. We are very pleased to have invested into 8 so far and are looking to make a couple more investments before the fund finishes February-ish next year. Now, when I was talking to Barry and preparing for this conversation, Barry did mention that it could be a bit provocative. So I actually wanted to open with a bit of a provocation for all of you listening today. And it's quite a simple one, which is, what more can you do? I'm sure a lot of you have been on the Mindful Money website, for example, and compared how ethical your KiwiSaver is compared to other KiwiSavers. But did you switch to the more ethical one? Equally, I'm sure there's a lot of fund managers or institutional investors on this call who have considered making impact investments and talked about it, but have you made one? I think we all know that finance is a crucial lever to tackle some of the significant challenges that this world is facing, and we all know we need to do more. So I hope that tonight you're able to take away some tangible steps and maybe even the courage to do just that. Thanks, Barry.
That's cool. Thanks, Jackson. Let me just, sort of while we're on this theme, Can you tell us where you see New Zealand's impact investment position now? How would you characterise the development of impact investment in New Zealand?
Yeah, good question. And it's been a really interesting journey. I've been working directly in the space for the past 5 years. And so I've seen it go from where we launched the first impact investing fund. And back then it was a very difficult conversation to have with investors to say, hey, we can take your money and invest it into things that is going to deliver you a financial return and an impact return. We naively thought when we fundraised for the Impact Enterprise Fund that because of that, it would be a simple exercise. So I thought it would take a couple of months. Close to a year later, we were close to finishing the fundraise, and it was a much harder exercise than we expected because it was about education. We were having to tell the investors that we were speaking to, this is what impact investing is, and that's why you should invest in us. And then if we fast forward to now, several years later, the market has significantly changed. So we've heard firsthand from investors who we pitched to back in the day, and they may have said no to us. They've said that the conversations we've had enabled them to start thinking about impact investing and considering whether it aligns with their SIPOs and things like that. And since then, a lot of them have made impact investments. So I think absolutely the kind of supply side of the market, the capital, is really starting to shift, and there's a real desire for it to go towards impact investments. The demand side, or the businesses that are looking to receive that money, that's absolutely matured as well. There's still a lot of barriers there, though. There's still really limited support for those organizations to know how to get investment ready, which creates pipeline issues for investors like us. So the market has absolutely accelerated and come a long way in the past few years, but there's still big steps to go.
Cool. And we are going to be coming back to some of these issues actually next week's seminar as well. But that's a really good perspective. Thanks, Jackson. Let me bring in Simon. Simon Pannett has spent 8 years in Harbour Asset Management fixed interest team, where his role is senior credit analyst. He's co-manager of Harbour's newly launched Sustainable Impact Fund, and when we say newly launched, we're talking about hours rather than days or months. So a big day for you, I'm sure, Simon. In addition, he chairs Harbour's Footprint Committee, a group improving Harbour's social and environmental footprint. So, Simon, tell us about your news from today.
Yeah, thanks, Barry. It was a really satisfying day seeing the fund come to fruition, and this is a great way to cap it off talking about it. So, hey, cheers for the opportunity. In introducing Harbour's Sustainable Impact Fund, I'd like to distill it down to 2 messages. The first that I'd like to make is that we're really genuine what we mean about sustainable impact. And second, that while alongside delivering impact, we aim to deliver or exceed broad market returns. There's no universal definition of impact, and without a universal definition, I think that it's wise for people to be guarded against greenwashing or perhaps impact washing in this case. And to that end, it's really great that Mindful Money run these seminars. I think Akina make a really compelling case for impact in their case. I'd just like to unpack what we do, and that is we look to align every investment with the UN Sustainable Development Goals. So I just spend a little bit of time unpacking how we verify that impact in practice. The first measurable step is to use ISS alignment data on SDG alignment. But impact data are new and far from perfect. It's particularly challenging when you may be trying to measure impact in the future with data. So data are important because it's independent and verifiable, but it's not sufficient. So before making an investment, the analyst has to make an investment case, but also an impact case. And the impact case has to pass through our broader portfolio management team. The next step, we're frantically finalising our impact committee. That's a team of external experts with backgrounds and technical knowledge in both environmental and social sciences, and they help guide us in the grey areas. And they also provide insight into the latest developments that we should be mindful of when managing the fund. And finally, while that committee's there for the benefits of investors in the fund, reporting provides that transparency that's really key to see whether the holdings align with their values. And reporting, you're going to know what impact is when you see it. Reporting allows you to see it. So turning to returns, I think it's fantastic that there are a cohort of investors that are willing to support focused impact strategies, and even with sacrificing returns. But Harbour is a large fund manager. We've now got $7.5 billion under management, and we're certainly a mainstream manager. And we want to take impact investing mainstream. I think we can do that, and we can make more of an impact. We bring more people along, but to do so, we think it's important to deliver returns as well as impact. That sounds fantastic, and surely there must be a trade-off. I think there is a trade-off, actually, and that is, it means that each asset class is quite concentrated. For example, in the fund, there's only 10 to 15 Australasian equities. So in order to bring a fund that will broadly resemble market returns, we have to combine different asset classes. So I'll finish, I'll give the fund in one breath. It might be a deep breath, sorry, Barry, but it is a 60-40 mix of growth and income assets. There's a 35% global equity allocation, which is outsourced to specialist impact strategies managed by Morova and T. Rowe Price. There's a 5% allocation to impact private equity or venture capital, and the remaining Australasian equities and fixed interest are managed in-house by Harbour. I can bring that to life with an example, or I'll take your lead, Barry.
Let's come back to that. I'll take the opportunity to introduce our third panelist. Let me introduce Natalie. Natalie Whitaker is co-founder and director of Tohu Foundry. As we'll hear, Toha's building a market that values, measures and rewards the actions needed to regenerate the planet. She was previously leader of the team behind Give a Little and Trees That Count. So amazing initiatives. So Natalie, warm welcome to you. I'm really pleased to see you.
Thank you for having me, Barry.
Very cool. Natalie, over to you. Can you tell us a bit about this intriguing base for Tohu Foundry's work?
Sure. So Natalie Whitaker, I'm one of 3 co-founders of Toha. Myself, Mike Taitoko, and Professor Sean Hendy. We have been working together for over 3 years now to develop some infrastructure that in our own careers separately we had noticed was missing in, I guess, our independent pursuits to see more resourcing at the front line for the innovations and solutions that we know are out there to many of the social and environmental challenges that we face. We went into a period following my time with Give a Little. I went into a period of R&D to understand more about the opportunity of digital markets to accelerate impact investing. And that collided with Sean's inquiry around more innovative models for funding science and Mike's journey to bring innovation to new solutions as well. And so we worked together to develop and design the Toha platform. And we've been really focused over the last 24 months improving out Toha as an impact investment platform in regenerative agriculture. That's our first place to prove everything out. But we know that the work that we're doing is critically important to scaling a lot of nature-based solutions that really struggle for the economic logic and financial logic for impact investment, and we're really excited about the impact that we can have as an organisation, but also the way that we can enable others.
Cool. Well, that sounds really interesting. Natalie, can you just give us a snapshot? When you say you're kind of giving value to the structures behind regeneration,
yes,
can you explain a little bit more to the audience what you mean by that?
Well, I guess my journey to Toha was really through my experience with Give a Little, really starting to ask some deep questions about what we place value on. Give a little, for me, was an opportunity to deeply understand the charitable and not-for-profit sectors and their struggles to basically originate equity in their business models from the delivery of the good work that they do. And so I came to a view that the big opportunity that we have really is to look at the data that proves impact as the biggest source of potential asset and new revenues for those entities. And if we could make really strong markets for that data, it would be possible to realize a new type of impact asset. And so that's what we've been working on in Toha. Basically, the platform creates assets out of impact measurement data and uses the data to support the financing activity and the blending of different types of capitals to make it more achievable for people to come together and work together to finance different initiatives. As well as realize a whole lot of new opportunities for measurement data to support new types of financial instruments. So we've got big plans for how the Toha market for data can support the carbon markets to evolve and be, I guess, well, in my view, creating a lot of externalities in their own right now, and also with how the data can support the proliferation of the green bond space, as well as provide much needed proof and verification to a lot of the commitments that are being made, particularly around climate, and a lot of the consumer development of consumer standards and new accreditations that are going to be required to give everybody confidence that all of these big changes that we need to make to cool the planet are indeed actually being done in a verifiable way. So
cool, great. That's really helpful. So let's bring everyone together. So if our other panelists could join us. I think, the audience hears of three very different impact investment approaches, and in a way, impact investment is trying to reach a very broad spectrum in terms of the audience, and just as investment is very broad, so impact investment has to be as well. But can we draw some threads here? So sort of starting back with you, Jackson. So tell us a little bit about the people who you think are kind of most interested in the Impact Enterprise Fund and that kind of, which is wholesale model. And can you describe a little bit about what piece of the market that caters for?
Yeah, absolutely. And so we are very clearly focused at that kind of venture style, high financial return end of the market, partly because when we were creating this fund, we not only wanted to prove that impact investing is possible in New Zealand, we wanted to really prove that impact investing can make as much money as traditional investments to get rid of that challenge that some people have with impact investing, which is why we chose that end of the market. Accordingly, a lot of our investors are also those that are familiar with investing in venture style assets, and certainly our wholesale investors. But I think what's really important and what's reflected on this call is that, as you say, Barry, the breadth of impact investments that are available. And certainly when we raised, there was a presumption that impact had to bring concessionary returns, that you couldn't get market returns with an impact investment. But we wanted to disprove that. And I think you're also seeing across the breadth of different assets on this call alone that impact can fit across a variety of different asset classes and deliver market returns across them.
And what about you, Simon? You've obviously done some work as Harbour on the kind of pitch that you're making to investors. Which investors? What's the point of difference? How does that look for the Harbour Fund?
Well, I think it would be fair to expect a bit of insight from me here, Barry. We are pointy-headed investment people who just launched a fund, so you would think we sat down spreadsheets and done a detailed business case, but actually we've launched this fund, we've gone with our gut. There's not a lot of market testing done before this. It is something that we just want to do. Having said that, we've obviously been having conversations with our client base, and they've been overwhelmingly positive. And not just, typically you have an idea and you get politely positive feedback. This is like really broad spread, overwhelmingly positive. And the conversations we've been having was with financial advisors who have been really supportive. I guess just to underscore that we're looking for a mainstream solution, which means daily liquidity, broad risk profile. But to give you a really definitive answer, I think we have to wait 2 years.
Yeah, and you're primarily at a sort of lower risk category than the Impact Enterprise Fund, for example, because you're mainly in listed securities. Correct. As opposed to mainly in unlisted. You're not in the venture capital space, the private equity space, SMEs. It's primarily the larger listed companies.
Yeah, the asset allocation is a 60-40 fund, which I think has often been thought of as your classic balanced fund. But we have a small allocation to private equity. And the reason there is often large companies, they make a difference, and the problems are too big just for private equity. But private equity has a real appeal and a huge role to play in impact investing, because it's just often where the development of new, changing, transformational technologies come from, and we just can't ignore that. So we do have an allocation to venture capital.
And how big could that allocation become? Because I think you said 5% at the moment. Could you grow that over time?
We have to operate within the bounds of offering a daily liquidity for our investors. Right. So that's capped by the fund supervisor.
Okay, cool. Natalie, you're after a high conviction investor who cares deeply about agricultural regeneration. Is that a profile?
Yeah. So our first investment offer using the Toha platform is definitely targeting an investor that is motivated to see regenerative transformation in a really critical part of the New Zealand economy, recognising that we have huge vulnerabilities in the way that we transition our agriculture from a intensive conventional model through to a more regenerative model that is in enormous demand, particularly as we look to our export markets and consider the new demands for product that is showing up in those export markets as with a lower environmental footprint, and the data that proves that. So we are our first fund, the Pledge Pioneers investment fund, is focused on providing debt to farmers to support transition to regenerative practices. There's an equity component in there as well over the data and the value of the data that is captured through the instruments that we've designed in the platform. And I'd have to say that we're really blessed to be supported like we are in the main Toha effort with investors who just really want to see big change in the way that the investment markets look, the financial markets look, and are prepared to catalyse the change in the proof of the model. So we're excited to be underway with that first investment, and we have a really amazing pipeline of farmers who are ready to make the transition to regen ag and just need a little bit of support outside the normal systems to get underway.
Yes, really, really interesting. When I thought about the valuation of the data, it's almost like you're ascribing value to the data for use for certification purposes and for credentialing.
That's right.
Even though in a way those markets don't yet fully exist. So it's
there are really positive signs in terms of we see demand for proof of impact data all over the economy. So it's very common for government funding programs to have a combination of both program funding as well as outcomes-based funding. We have we see a very clear path of the data into the carbon markets and the opportunity to develop new types of markets for more holistic offsets. Obviously, there's huge change happening in the way that we are requiring our public reporting entities to disclose their climate financial risk, and the data is very important, heading back into those markets, insurance markets, as well as that consumer certification space as well. So yeah, many markets to realize the value of the data. The key thing is making sure that those that are doing the hard work to regenerate the land and bring forward all of this value are supported to undertake those programs, have access to friendlier finance to undertake those programs, and then are supported with the science-backed programs of change to capture the measurement in a way that the market is going to value.
Yeah. So hopefully at some stage there'll be payments for biodiversity services in the same way that we pay for carbon sequestration.
That's
but
right.
We're a way away from that yet. While we're on this theme of measuring, let's sort of come back to you, Simon, around the kind of impact measurement. So as you said, you're linking the impact to the sustainable development goals. Are you able to sort of go into a granularity to be able to say, yes, we're sure that it has a positive impact, or is it sometimes just associated with a sustainable development goal? How do you do that to kind of, in a way, unpick that company impact?
Yeah. Oh, I've gone dark.
We can still see it.
Well, so we subscribe to ISS data that measures alignment to
Sorry,
SDGs.
you better explain ISS. So
it's an external data provider, but it's still an evolving space, and it's quite fraught. So we have to overlay the data with our own assessment. But if I kind of go back and make things even more simple, these alignment metrics are useful for us, but I think for the end client, we actually have sort of three layers of verifying and demonstrating the impact. The first one is really simple. It's just a list of companies and what SDG they contribute to, and often it's quite intuitive. The next layer is that strange lighting. The next layer is that intensity of contribution, and then the third layer is providing, I think, hard evidence. So that might be megawatt hours created of renewable energy and created over the year, or it might be litres of water saved, etc. And people want to see all three. And finally, I think people want to see and be able to touch and feel things via stories and have a connection to the impacts.
And so that's going to be part of your reporting challenge, to be able to report on this stuff in a way that blends some of the stories with the data analytics, right?
That's right.
And how often does that reporting happen? Are you going to be, so presumably you're doing quarterly updates and...
That's right, a quarterly update and a really thorough annual report. We were sort of debating, I think we have to do the annual report before the year ends because it's a long wait, but yes, that's right, a quarterly cycle with a really fulsome annual report.
Cool. And Jackson, you guys at Impact Enterprise Fund, I know, have been doing a whole lot of stuff on the impact measurement project framework. Can you describe a little bit about that measurement of impact?
Yeah, absolutely. So we pretty early on partnered with the Impact Management Project, which I would say is one of the leading platforms in the space globally, to really provide some guidance around how to measure impact and particularly kind of compare it and create a consistent language. So that's certainly been the basis of our framework. And from there, it's enabled us to come up with just specific measures for each of our portfolio companies. And like Simon, we get those measures every quarter. We've actually just released our very first, speaking of annual reports, our very first annual impact report, which was really exciting. And I'm not sure whether something like that's been done in the impact investment fund space in New Zealand before. So that sets out the way we approach impact, the measures across the calendar year for each of our portfolio companies, and some goals and things that we're working towards in the future.
And can you give us an example of how those measures work for one of the companies
Yeah, absolutely. So it's been a really big learning for us. I think it's safe to say, and it's something I would make sure everyone is aware on this call, that impact investing is exceptional and absolutely, obviously worthwhile, but it takes time and energy, you know. And just hearing what Natalie's saying about the amount of data and things that Toha's getting, it gives me shivers to think about the time and energy that goes into it. But as you can hear as well, there's ginormous value in doing so. So absolutely encourage you all to do it, but it takes time. One of the areas we spend time with each of our portfolio companies is working with them to develop an impact model for them. Kind of a basic theory of change or logic model, which sets out what are the activities that they do, the outputs of those, the outcomes of those, and then ultimately what is the impact that they're contributing to. And that is the first step for us in creating impact measures. From that, we can then find an area on that impact model that is quite simple and pragmatic for that company to measure and create the measure for them. Typically, that measure doesn't relate to the ultimate impact. The complexity of the impacts that we're all trying to have on this world is difficult for any one organization to measure and say this is what we did there. But absolutely, by having that model, we can really clearly draw a logic thread or a line to say, by displacing these 2 million single-use plastic bags, for example, we can see that all of these things happen to prevent more plastic from going into the ocean or into our landfills, for example. So that's kind of the process we follow to come up with our impact measures.
It's interesting, isn't it? I used to be CEO of Oxfam for a decade or so, and we spent so much time sort of thinking about impact and measuring impact, and ultimately, you know, impact has to be real to the people who are at the end of the line. And so you have these different levels of impact that we all talk about, whether it's at the level of a kind of listed corporation or whether it's the level of you know, a hapu or an individual. You have to be able to scale it to really understand. So it's a never-ending task. Natalie, a question's coming from Nick Jack, who says, can you run through kind of what this decision-making is from the farmer's side around the sort of debt to regeneration argument? Sure. and the offer that Tohu Foundry is making in that equation?
Yeah, sure. So, I mean, we've been really privileged to be right at the heart of, I guess, a really talented group of advisors, regenerative farming advisors that really know how to support clients and farmers through a journey from conventional practices to regenerative. And through over the last couple of years, my co-founder Mike has really gotten to understand what it is that prevents you know, all farmers from heading in this direction. And really, I guess what we realize is that there is a lot of information that would suggest that going regenerative is risky to your business, but quite the opposite is what we've found, and that is that a lot of the in farming and particularly in dairy, we're seeing you know, a really challenging forward forecast, I guess, on the business resilience when, you know, we're relying on more and more fertilizer to keep productivity levels where they need to be. And what the regenerative process does is provide some independence within the farming system to kind of reboot the biodiversity and the biology of the soils and really focus on the ability for the land to be more self-sustaining in its fertility, and as a consequence of that, there is the you know, the relief from some of the costs, the input costs, and also once the health of the overall system increases, you see drops in other costs within the system. And so when it comes to the decision making, what we find is that it's not primarily the environmental impacts that are motivating the farmers. It's actually the hope of improved business resilience and a sense of connection and control over the destiny of the farm, in a sense that the farming is heading back back to nature, basically, and that process is one that's quite enlightening for many, and then a lot of those environmental benefits come forth. But it's really about, I guess, providing farmers with the knowledge and the support, case studies, and proof really that the model can lead to improvements. And the opportunity to sustain profitability, despite what some of the conventional interests would have you believe about the necessity of synthetic inputs, basically.
Cool. Yeah. Sounds great, and you've got a fantastic team working with you, Natalie. So more power to you on that work.
Thank you.
Simon, when you made your initial introduction, we kind of ran out of time to explore the issue of maybe a couple of nice tangible examples of the sort of thing that the Harbour Fund will be investing in. Do you have, sort of seeing it's all fresh for you today, having just launched, do you have a couple of favourite companies that the fund will be investing in?
Yeah, sure. I'll start with the controversial one, and then maybe give chance for other panelists, and maybe come back to some green bonds. I think is a topic that's interesting. But a controversial one, one of the fund's largest global equity holdings is a company called Next Era Energy. It's a US electric utility. It was founded in 1925, so it wasn't founded as a solar power company. It was a coal-burning electric utility. And indeed, they still do hold fossil fuel generating kit. But why we think they are impact is because they I think almost could be the largest investment into renewable energy in the world, and that includes landfill gases. Really innovative company, and we think that is key to facilitating an energy transition, is getting big companies like this to focus all of their investment in shifting their kit. But if you followed a pure exclusion approach, which some responsible investing strategies do, this sort of investment wouldn't be eligible. But we're looking at it from an impact lens, and that is that transition. And it has to be genuine, and we appraise this as a real genuine transition.
Cool. Yeah, no, I've looked into Next Era. It's an interesting story and an interesting dilemma, because they are still got one foot in the fossil fuel world. But as you say, they are in transition. So that's a good one. We are expecting one or two more questions, but I've got lots of them. So let's carry on. Jackson, I kind of congratulate Akina Foundation on the work that Akina's done in the impact space, and you guys have been real pioneers in the field. Could you talk a little bit about what's next for Akina? Because you're embarking on a kind of new strategy for Akina, is that right?
Yeah. Well, no, it's been a real journey to see how the New Zealand market has shifted in the decade now that we've been operating. It's a bit scary to think back. But we've recently concluded a quite significant partnership with the government, where we worked for the past 3 years with the government to help them understand how they can better support a flourishing social enterprise sector. And so we're just working through those final stages, and there's a cabinet paper being prepared and things like that, which is a really exciting kind of closure of that chapter, and enabled us to think more broadly around what does New Zealand really need to keep accelerating it going forward. And that sits across each of the pillars that I mentioned. From our investment work, we're thinking about what does the market specifically need to continue building it. We've absolutely proven impact investment is possible in New Zealand, along with all the other great people on this call and in this sector. So what do we need next to really build that impact to the next level? The procurement space, again, is going from strength to strength. Government have recently changed their rules of sourcing to enable organizations to consider explicitly the broader outcomes of a potential procurement transaction. So there's huge changes there. And in the impact consulting space, I mean, COVID's been really interesting there because we've seen a market change from pre and post COVID, or during, I guess, that organizations have a very different perspective around how important it is to be doing things more than just making money. And so we're having organizations come to us and either say, you know, we think we're doing some good, but we don't really know how to describe it and articulate it. So can you help us with that? Or there's other organizations that come to us and saying, we need to do some good because the public is now expecting it. So the kind of sector generally is really starting to shift in New Zealand, and we're really pleased to be kind of riding that wave and helping those organizations accelerate their impact.
Cool. So we like to keep these seminars short and sharp, as we say. So we're pretty much run out of time. And I just want to say thank you so much to the panel. And I think we've heard a great kind of diversity that is impact investment in New Zealand. It's still kind of at its nascent stages, but starting to happen in exciting ways. So thank you, all of you, for sharing with us. We just put some information about the initiatives in the chat. So those on the audience, please check it out and have a look and see more about each of these developments. Next week, I hope you'll come back as an audience and maybe the panelists as well. We're having an interesting session, which is saying, what do we need to do to kick up an impact investment to the next level? And what we often hear, with the honourable exception of Harbour, who's going ahead and setting up a fund, we often hear from mainstream funds that they don't think the public really is demanding of impact investment. You know, if it's provided, will anyone buy it? And so what we're doing is we're going out and we're going to be asking people, do you want impact funds? And we're going to hear back from people. And we're also hearing back on kind of new directions for impact investment from a good panel. We've got Rachel Brown, who's CEO of Sustainable Business Network and an absolute legend on sustainable ventures. So she'll be addressing some of the supply issues that you talk about, Jackson. You know, kind of, have we got enough businesses that we can put money into, and particularly the unlisted companies? And the answer is a resounding yeah. There's a lot of really great stuff happening out there. We've got Roy Thompson from Newground Capital, and Roy's got a new venture called Homes for Tamariki on social housing, and has been a real pioneer in the field and fascinating on the issues. And we have, who's our third panelist? Just completely gone. Oh my gosh, it's Joe Kelly, who's the CEO of Tohu. And Joe's written all about impact investment. She's involved with one of the leading organisations, a Connective. She's absolutely fascinating on the issue, and so I hope you all come back next week. So to close, I'd like to thank our sponsors, of which Harbour Asset Management is one. So thank you very much, Simon, and your team for supporting this seminar series. Also, Generate KiwiSaver, Booster Asset Management, and AMP. So thanks to those sponsors. Special thank you to our audience. Look forward to talking to you next week. The link will be up very, very soon. We'll put the link to next week up probably by tomorrow morning. And so please check in, and we hope to see you then. So thanks to all. Ka kite anō.